Good day, students. This is Gwande Tyron Majola. Umchunu ngqulungu ndaba ezethu yes macingwane. Ngela zabatyoli nabagodusi nyoka neklasi mabona bulawo. I'm your tutor for financial accounting from Gen Z Tutors. Today we shall be focusing on the accounting equation. So now, as you know that with the accounting equation, what we have your asset being equal to your owner's equity plus liabilities, right? And asset have what? Asset have a debit balance. They all have a debit and a credit, but your assets will have what you call a debit balance, meaning they increase on the what? On the debit side, right? With the debit balance, they increase on the debit side. So now we have that, and also, and they decrease on the what? On the credit side. So increase on the debit side, decrease on the credit side. And then now with owner's equity, you also have with your thingy, with the owner's equity, it's also the same situation. Now let's do this. Now you have debit and your credit, and they have a what? A credit balance, right? So we have a credit balance over here, meaning that owner's equity increases on the credit side and decreases on the debit side. And then at the very same time, we have what? We have liabilities, which also increase on where? On the credit side, which means it has a credit balance, meaning liabilities increase on the credit side and decrease on the debit side. And then you also have owner's equity under owner's equity. You also have things like what you call income and expenses. So basically, this this credit side represents the income side of the company. When you exclude the distributions by equity participant, this is the income side, and this is the expense side, which is the debit side, where expenses increase on the debit side and income increases on the credit side. So that's also part of owner's equity. And then going forward, and then now let's make for you to actually understand this, let's make a few examples, and then we're gonna say fine. We first start with, we create a company on 1 April 2022 or 20x2, which is an XYZ deliveries companies with the year end of 31 March 20x3, right? That's the inception year. And then now we're gonna have the transaction to start the company. The owner contributes 100,000 to start the company. That's the first transaction. And then the second transaction, the owner took a loan of 100,000, which is payable in equal installments at the end of at the year end for 8 years. So at the end of every year, we are paying an installment to pay the loan. And in this situation, we'll just assume there's no interest to make things simple, right? And then again, what do we have? We have we paid PZ agency for assisting us in creating the company for 5,000. So meaning that the company cost or inception cost was 5,000 to register for CIPC and all of those tax and all of those things that are necessary to start a company, right? And then what else do we have? Now we purchased 2 motorbikes to start the company, since we are a delivery company, right? We have to deliver goods and services to our consumers or customers, right? We purchased 2 motorbikes at the start of the company, and then these bikes are depreciated on a straight line method for 5 years, and then purchased another bike halfway through the year, and then all motorbikes were purchased for 50,000 each. That's perfect. And then we have the information regarding that. And then again, we have what the owner took 10,000 for personal use. That's another information, which means that we have drawings. And then also transaction number 5, we have monthly rent, which is 3,000 per month. And we have what you call completed we completed 554 deliveries for the year, with an average revenue of 100 rand per delivery with 60 rand fuel cost. So that's what we have, the transactions that we have for now, right? Let's see if we had any other transaction written. I doubt we had any. Okay, fine, there was no other transaction. Now let's go back to our accounting equation. Assets equals to owner's equity plus liabilities, or you can write it in a way and say owner's equity is equals to assets minus liabilities, or you can say liabilities are equals to assets minus owner's equity, whichever way you run it. But the simplest format that is used, it's assets is equals to owner's equity plus liabilities. Why is this the simplest format? It's because now our assets are financed by our owner's equity and liabilities. For us to get assets, we need to buy them with something. And how do we buy them? We finance them with owner's equity or liability. We either get a debt to buy a certain asset, or we get our shareholders' contributions to buy our assets, or our remaining revenue, which is our retained earnings from the previous years, to buy our assets. That's how we buy our assets. Or we can convert certain assets to purchase other assets. So that's another way also as well. So now, in our instance, we need to identify in each transaction that we're going to go through, we need to identify whether it's an asset, owner's equity, or liability, and its contra account that's going to be affected, right? So now, let's go into this situation. Transaction number 1, owner contributed 100,000 to start the company. What has happened here? The owner contributed 100,000 to start the company, which means now we are going into what? Owner's equity, because this is a shareholder's contribution for 100,000. So in the owner's equity increases where? On the credit side, which is the credit balance. So now in our situation, we're gonna say we have what? 100,000 going in here. We have 100,000 going in here. Let me just do this. Okay, we have 100,000 going in here to increase our what? Our shareholders capital, right? That's for shareholders capital or shareholders contribution for 100,000. But now, isn't there a contra account? So now at this point in time, let's just say I'll just write this information here: shareholders as contribution, and that's for the 100,000, right? And then that's a credit shareholders contribution. And then also at the very same time, what do we have? If ever we're increasing our shareholders contribution by 100,000, it means the company received money through their bank account, which is what? An asset. And assets increase where? On the debit side. So it means now you also have 100,000 on the debit side on the assets of what? Of our bank account, right? And then that's what we have. And then also, for a good note, always make sure that you understand that these items on your thingy, your bank will always go to your statement of financial position, and then your shareholders contribution will always go into your statement of changes in equity. Just as a side note, always insert that in your head. Always know that, right? So now we credited what? Owner's equity and debited our assets. So it meaning that our accounting equation is still balancing at this point in time. So now let's just say, okay, even though okay, I did a few transaction situations, but then okay, fine, I'll add this as a total in the end. It's fine. And then now we have 100,000 for assets and 100,000 for owner's equity. We are done with transaction number 1, right? So now let's highlight that. Okay, we'll leave that like that. And then number 2, we took a loan for 100,000, which is payable in equal installment for the for every year end for 8 years, right? So now what is happening? We are increasing our liabilities, and our liabilities increase on where? On the credit side. So it means now we increase our liabilities by what? 100,000. That's the loan that we took. So now you're gonna say loan 100,000. That's how much we owe the bank. And then also at the very same time, you're gonna go and say, okay, fine, we received money from the bank, we loaned from the bank, we did not write the bank's name, it's fine. But then also again, what is happening? We are having an increase in our assets, right? We have a liability increasing, which is a loan, but that means our bank account is also getting fat. So now we're getting our bank account also as well, SFP. And then our loan also as well will be going into what? SFP. right? That's fine. Still, our accounting equation is balanced: an increase of 100,000 on assets and an increase in liabilities of 100,000. So we are still happy at this point in time. So now transaction number what? Number 4. Okay, sorry, that was supposed to be number 3. Okay, paid BZ agency for assisting in creating the company. So this is what we call what are they called again? Company inception cost, or cost of starting a company. So now we also have to go and thingy, what you call, record this as an expense. Now note, it's the beginning of the company, but now these are the startup costs. So these startup costs, we shall expense them. They do not affect our shareholders' contribution. Yes, we are starting the company now, but it does not mean that the shareholders contributed less. They contributed 100,000, so it's still gonna remain as 100,000. But now what is gonna happen is that we now have an expense. We now have an expense of what you call of 5,000. So it expenses increase where? On the debit side, right? Expenses, which means whenever an expense occurs, it comes in expenses increase on the debit side, which what is happening on the owner's equity when there's a debit transaction? It means there is a decrease in our owner's equity. So now we have 5,000 that is there, which is an expense to us. So now we're gonna say startup cost, and then just include in bracket expense, just so that you remember that this is an expense and it is where what just happened. Oh, apologies about that. The 5,000 goes in down here, and then we have startup costs, which are what? An expense to the company. They do not affect our shareholders contribution, but they do affect owners equity. So expenses increase on the debit side, and the debit transaction is a decrease in owner's equity, since our expenses fall under owner's equity, right? So now there we go. And then from there onwards, we need the contra account of this. So now what is happening? We debited owner's equity, and then what? On the other hand, what happened? We had to pay with our bank account, right? Then now you go in there and say bank SFP, and then you see this and use that particular amount. And then also at the very same time, since this is an expense, just make sure you also write that this goes into the statement of profit and loss, P&L, right? So I always remember on while even though you are doing accounting equation, to remember that this goes there, this goes there, this goes there, and there we go. Then you go to our next transaction. What happened? It says purchase 2 motorbikes at start of the company, which is our inception date on April, and which are depreciated on a straight line method for 5 years, and purchase another bike halfway through the year. All motorbikes are purchased for 50,000 each. So now we are now purchasing what? Motorbikes. And since we are a delivery company, what are the motorbikes to us? They are our assets. So now we go and say, now on our assets, we purchased assets which have a what? A debit balance. So now we come and say, okay, fine. We purchased assets which are 2 motorbikes for how much? For 50,000 each. So now we say, oh, we purchased 2 motorbikes for 50,000 each. And then now, also you have to remember another thing. It's those are the ones which are purchased at the beginning of the year, and then the other one was purchased halfway through the year. So still makes no difference. So we can say we purchased actually 3 motorbikes, but keep in mind 1 motorbike was purchased halfway through the year. This will affect our depreciation. So now we can say, okay, fine, motorbikes purchased for the year, and then we can see our asset motorbikes and then which is goes into what? Statement of financial position. And then this will always help you writing which account goes where, even while you're still in the accounting equation. It will assist you in making sure that you post everything to the right accounts whenever you start after you have done your ledgers and your general journals. Then you know that this goes into statement of changes in equity, this goes into statement of financial position, this goes into statement of profit and loss, so that you do not mix the two and know your procedures properly. And then now, there we go. And then now, after the motorbikes have been purchased, you have to ask yourself, what else happens over here? The motorbikes have been purchased, but now at the very same time, what were they purchased with? They were purchased with cash. So now you're gonna have to go and say, okay, fine. We increased our assets with 150 with three motorbikes costing 150,000, but now our bank account will now decrease with 150,000 as well. So it's an asset, buying an asset at this point in time. So we're gonna say fine. Then now we're gonna be affecting our what? Our bank account, bank SFP. You understand? And the rest of these are not affected. And then from this point forward, we're gonna have to say, okay, fine. You also have to take into account our what? Our depreciation situation that happened, right? So now depreciation for two motorbikes will be for the whole year, and then the one other motorbike will be for what? At the end of the year, for halfway through the year. So now let's calculate our depreciation. Our depreciation, we have to understand one other thing. It is what? An expense to us. An expense have a debit balance on the owner's equity, since there are a decrease in owner's equity. So now we go and say, fine, we're gonna go and say what? Two motorbikes which are what? Costing 50,000 each. And then we get that. Let's put that in brackets. Let's put that in brackets first. Put that in brackets. And then these two motorbikes will be depreciated for what? For 5 years. So now you're gonna divide that by 5. And then you're gonna divide that by 5. Okay, what is the error here? Okay, I see where the error is. There we go. So now it means the depreciation for the VEG DPN depreciation, which goes into what? Profit and loss. Profit or loss statement, right? Goes into the profit and loss statement. And then now this is the depreciation for the two vehicles. But now whenever there's a depreciation of occurring, there's also a contra account, which is going to be what? Accumulated depreciation, because now you want to see out of the motorbikes that we have, how much value have you actually used as the company from these motorbikes. And accumulated depreciation has a credit balance as much as it is an asset. So it is a negative asset that we carry on until we sell the motorbikes or our assets, right? So it shows us how much usage have we actually utilized out of the what? Out of the assets that we have. So that's what you call accumulated depreciation, which goes into a SFP, statement of financial position, unlike depreciation, which goes into profit and loss. Are we happy with that? And then now you're gonna go and say, okay, fine. Now you wanna calculate the depreciation for the what? For the other motorbike, which is what? 50,000, right? So the motorbike, which is costing 50,000, we want to calculate its depreciation. You already know that this particular item has what? Is going to be depreciated for 5 years. That's number one. But now all throughout this whole situation, inside brackets here, all throughout this whole situation, this motorbike is going to be used for how long? It's going to be used for half a year, which means we will have to multiply with what? Multiply with 6. We're going to be using it for 6 months out of what? 12 months, right? and then there we go. That means our depreciation for this motorbike is going to be 5,000. And then now our accumulated depreciation is going to be the same, since we already have that. That's the debit side. And then we're going to say accumulated depreciation, and then there we go, right? Then that's how we're going to do that. That's the depreciation line. Now that's complete. So now you see accumulated depreciation, negative asset increases where? On the thingy, on the credit side. But the other assets increase on where? On the debit side. This one increases on the credit side. Then there we go. And then let's continue with that. And then we're gonna go and say the owner took 10,000 for personal use. Now this is where things also get interesting as well. You have to understand one single thing. Drawings are not expenses. You have to start remembering the definition of an expense. It's a decrease, or it's a decrease in what you call in owner's equity, besides equity distribution to equity participants, right? So now in this situation, this is a distribution to an equity participant. So this is 10,000. This is due to the equity participant. So now it is not an expense. It's just a decrease in owner's equity. So there we go. As much as we are debiting it, we shall debit it. But now what are we debiting? We're debiting drawings. They are not an expense, but a distribution to equity participants. So now we have what? This owner took what? 10,000. There we go. Decreasing what? Owner's equity, which decreases where? On the credit side, on the debit side. And then we have what? Drawings here. Drawings go where? In the statement of changes in equity. I don't want to see you putting in drawings on your statement of profit or loss. Drawings go to statement of changes in equity. Then we got that right. And then now the contra account would be, now they took money. Where did they take the money from? From our bank account. So now you're going to go and say bank SFP, and then that's done. So now you see your accounting equation is still in balance. Everything you do on the right hand side, you do on the left hand side. And then now, after the drawings, we're gonna have to say we have monthly rent for what? 3,000 per month. Now the monthly rent is an expense. So now we go and say, okay, fine. We're still gonna debit this, but now this is an expense. It is a what? An expense. Expenses have a debit what? Balance on owner's equity. Right, so now an expense on owner's equity, as much as it's a reduction in owner's equity, but it is not going to what? The equity participants. Thus, it remains an expense. Therefore, we have what you call 3,000 rent per month. So that means times 12. So we have 36,000 rent for the whole year, and then that's rent expense. Rent expense, which goes into a statement of profit or loss. Then you leave it like that. And then now where did we pay? How did we pay for that? We paid for that with our bank account. Okay. So you're gonna be what? Crediting our bank account. So now bank again, SFP. Are we still together? And then now let's add a few more lines to this. And then we're almost done, guys. Almost done with the accounting equation. And then now again, what is gonna be happening over here? We have what? Completed 544 deliveries for the year with average revenue of 100 Rand per delivery with 60 Rand fuel cost. Since we are operating a business, we have to eventually make what? Sales. And when we make sales, we make money. So now, let's go into our sales. Our sales are what? Our income, which have a what? A credit balance on the what? Owner's equity. They increase our owner's equity. So now let's go and say sales. Right? We have sales. We are crediting sales. Sales which go where? In the statement of what? Profit or loss, right? And then how much are we having our sales for? We had 544 deliveries. Now be careful here. Remember how many motorbikes are we having? We have 2 motorbikes from the beginning of the year, meaning we utilize 2 motorbikes for the whole year and only utilize the other motorbike for what? For the end of the halfway through the end of the year. So now it would be wise for us to go and say, okay, fine. We have 544 on average. This is for every motorbike. So 544 for every motorbike. 2 motorbikes were used throughout the whole year. So now that is fine. And then you're gonna say they made a revenue of what? 100,000 all throughout the year of 100 rand per transaction. And then you're gonna say plus again 544. This time around there's no need to times by 1, but we're gonna times by 100 for how much was made, and then multiply that by what? By half of the year, right? Because this was not done for the whole year, and this is why it was important that in the statement it was told that average revenue of what? 100 rand, so that you know what it was constantly so, or something like that, almost constantly so. So that's why it was average revenue, right? And then now this time around we're gonna say half a year, which is what? Multiplied by 6 over 2, right? Or you can just include brackets just to be safe. 6 over 12, apologies on that. 6 over 12, and then you're gonna have that, and then that's your revenue for the year. So we end up having 136,000 for the year made. And then now on our revenue that has been made, now what was happening when the revenue has been made? We could have been making sales based, we can even say some of the sales were on credit, so we have debtors. But for simplicity's sake, for now, I'll just assume we are using bank. So now we're gonna come and what? Increase our what? Our asset. The increase where? On the debit side. Contra account of this, it's gonna be what? The assets increasing on the debit side. And then it's gonna be that. And then you're gonna say bank for now. Overutilized bank, but it's fine. We could have split this into debtors and bank, but then let's just use this for simplicity's sake. An increase in that. And then again, what else do we have? We have our cost of sales. Cost of sales are an expense to the company, but an expense that is directly attributable to the production of our services in this situation. So now they said what? 60 rand fuel cost, which was there. So now you can go and say, fine, I want to copy this whole formula. You can copy this whole formula and exchange that 100 rand with 60, or you can just rewrite it all down. But for me, for simplicity's sake, I'm gonna say, okay, fine. Oops. I'm gonna say, fine, copy all of this and leave it like that. And then come and say, we're gonna go and do what? And have an expense, which is gonna be, our expense is gonna be what? Our cost of sale. Right, so expenses have a debit side on the owner's equity, which is a decrease in owner's equity. So now we're gonna go and do that and say 60 rand fuel cost, and then 60 rand fuel cost again, and change that. And then this is our expenses or cost of sales, cost of sales, cost of sales, which will go where? Which will go in our profit or loss statement. And then our contra account that's gonna be happening in this situation have what? Our cost of sales. So now we have to also be savvy about the situation. Is our company buying fuel and storing it, or is it purchasing the fuel as they go? In such a situation, you see that no, they actually purchase the fuel as they go. You could have made it a situation where you store the fuel and then it can be also affecting our what? Our inventory. You see? But now in our situation, we did not say our fuel, we have a fuel storage facility. So now it is a thingy, our cost of sale, but then with our thing, our what you call our petrol being purchased on the go by the carts on the thing, on the motorbikes and stuff. So now we're just gonna go and decrease our bank directly instead, right? And see, decreasing our bank directly. Oh, sorry about that. And then decreasing our bank directly with what? Decreasing our bank directly with our cost of sales, right? So now this is the contract account of this, and everything is still in balance. So now let's check if everything is actually balancing out, right? So now I'm gonna do this and make this a single cell. Then from here, I'm gonna say this is equals to the sum of this and this and this and all of this and this and this. Then close our bracket. Then we are getting what? 643,600, right? Then let's mark that and highlight that. Then now let's see what we'll get over here. Now let's sum the owner's equity plus liabilities up as well. So now let's match the cell as well. And there we go. Then this will be the equals to the sum of the shareholders contribution, the loan, the startup expense. Oops, and I made one error. I just remembered I made a single error. Now I summed everything up in here instead of actually separating the debit and the credit. So I think I need to fix that quickly. So we sum everything up. So this is equal to sum the debit side, sum the debit side, and then close that bracket minus the sum of the credit side. And then what do we have? We have 178,400, right? So that's what we have. And then over here, now again, we're going to go and say sum. Now let's go and sum the debit side. Basically, since this has a credit balance, we're going to start on the credit side. So you're going to sum the credit side on liabilities and thingy on owner's equity. So we're going to do that and take this also as well, and take this also as well, and then sum that up and subtract the sum of the debit side. Debit side we have this, 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 this. I wasn't done there. Then I have this as well. Then there we go. So now your assets are equal to your what? Your owner's equity plus liabilities. And there you have it, folks. That's how you make your this. If you follow this all throughout and post everything where it's supposed to be posted on SFP, 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 and then SCE, P&L, everything, your accounting equation will balance, your statement of financial position will balance, you'll get the right amounts everywhere you go. So basically understanding your basics is very important. That's why I had to include that. This one was related to what? Owner's equity, affecting owner's equity and our assets. And then also at the very same time, this affected our liabilities and our assets. This affected our what? Our owner's equity via the expenses and our assets via bank. This affected our what? Our expenses and our assets also as well. And at the very same time, it affected our assets twice. And then this affected our what? The old drawings affected our what? Our owner's equity and our assets. You see, there's always going to be two transactions or two situations that are going to be there's going to be the main account, the main item, that's event that's taking place, and the reason behind it. You understand? So it's always going to balance out. And then this was for the cost of sales and the cost of sales. If you have any further questions, do not hesitate to ask the questions. We're always available at Genzo Tutors. I'll put in the details for you to contact us in the end of this video. Thank you guys. Have a great day.